Thank you so much. So unlike many of the presenters that you've heard in the panel, the excellent panel that Tim has put together here for Spark Plus, I'm actually not going to be talking about mining. Although lithium is included in the materials and extractive industry sector, we actually don't do any mining. This is simply water treatment to produce a high quality chemical that goes into the battery supply chain. And with that, I'm going to share my screen. This is the presentation I gave earlier today in Argentina as part of their annual lithium conference, where I focus particularly on our flagship project, Kachi.
And sorry, Steve, maybe a quick note before we jump in. We had a lot of questions come through beforehand, and I think really that's where, you know, investors and shareholders get the most value out of these presentations. Okay. So if we can sort of give a high level overview in the presentation and then go to Q&A.
So I will be making forward-looking statements. As many of the people are aware, we are in the lithium triangle where large lithium brine projects are located. I'm going to be talking mainly about our Cauchari project today, which is about 100 kilometers south of Livent's operation, which has been operating for the longest time in Argentina since 1997. But we have 3 other projects as well. And our focus has been to produce a very high purity lithium product, which gets a high margin, to do that with a major ESG benefit, which is in demand by car makers. And the only way to do that is to use a new technology. We can't expect to use the same method that we've used for decades and expect a different result. We've seen technologies improve. Our technology partner, Lilac, has some of the biggest tech investors behind them. And we recently formalized our partnership to make certain we can deliver this project. We've been running a pilot plant for some time in California. We aim to have a demonstration plant on site either at year end or very early in the start of the new year. And we've got most of our project finance in place. Just a quick recap on how that technology works. We replace the evaporation ponds. That's essentially all we're doing. The rest of the flow sheet is the same. We pump the same brines out from underneath, but instead of having evaporation ponds going across the horizon, we've got a warehouse that has about 50 modules in it, or tanks. Each of those modules are about 4.5 meters high, about 2.5 meters wide. And inside each one are these ion exchange beads. And they bond very quickly onto the lithium. And that allows us to then let the rest of the brine go back to its source after 2 hours. We've captured 80 to 95% of the lithium. We strip that quickly in less than 10 minutes using hydrogen chloride. It forms lithium chloride and water, and that is the feed for the back end of the plant. It's faster because you're just taking the lithium out. It's high purity, it's sustainable, cost competitive. We've demonstrated now for ages at benchtop scale, at pilot plant scale, and honestly, moving from 1 or 2 modules to 20 or 50, where it's a limited scale up. Quick recap on those ESG benefits. Much smaller physical footprint. We're talking the size of 1 or 2 city blocks instead of 20 or 30 square kilometers. Instead of all of that brine being evaporated, we return virtually all of it back to its source. And it has a small carbon footprint. And because we are going to be using a solar PV farm, that carbon footprint will be even smaller than other lithium brine producers. We recently partnered with Lilac. And although we've been partnered with Lilac now for more than 3 years, and formally since early 2019, we needed a very fulsome agreement for the debt financiers, something that wasn't just 10 pages, but 100 pages long. And the other thing that has come up is that this calendar year, we've been able to access equity. We've been fortunate in being able to access debt, long dated and low cost. We know that we can access tier 1 off-takers, but investors were still concerned about the technology itself, how well it would work at scale, would it produce that same quality consistently? So he said, all right, we'll have our technology partner earn into our flagship project by demonstrating that all of those things actually work and work at scale at that quality. And if they deliver that, then they'll put their approximately US 50 million into the project alongside our equity funds to deliver it. And so it's a great little setup. And the best thing about it is that with Lilac, although the money's coming from them, it's essentially a pass-through from some of the best known names in the tech sector in Silicon Valley. The Breakthrough Energy Ventures has money coming from, it's headed up by Bill Gates, but it's also Jeff Bezos, who with Amazon has announced 100,000 vans that will be electric, and we haven't heard of where that material is going to be sourced. And Lowercase Capital, and now their new entity, Lower Carbon Capital. Lowercase Capital was the most successful venture capital fund in Silicon Valley. It returned more than 250 times and was an early investor in Uber, Twitter, Instagram, and this is their very first investment in the Lower Carbon Capital Fund, and MIT's the engine fund. So we've got the right sort of people backing this. The project itself is large and scalable. You've heard me comment on it before, large resource with the rigs back there at the moment. We're making this even larger, and that's to support an expansion. That expansion case, only 6 or 9 months ago, we were just focused on 25,000 tonnes per annum production in our pre-feasibility study. Now with the demand there, every off-taker we talk to wants to buy everything we can produce for the first 5 or 6 years. It's naturally better for us to have 2 off-takers if we can. And so that's why we're going down the path of the expansion study to 50,000 tonnes per annum. And our debt providers have also indicated their support for that. This is what the plant would look like. And if you look at the right-hand side, letter A, that's where the modules will be that replaces the evaporation ponds. We've demonstrated this works in nickel-rich batteries, thanks to Novonix. Because it's a high purity product, it gets a high margin, and that flows directly to the robustness of this project financially. Those PFS metrics, it has an NPV8 of 1.6 billion US and an annual EBITDA of 260 million. And thanks to the debt financing, we're looking at free cash flow after the first 12 months, approaching 200 million US a year. And given that 1 year's free cash flow is equivalent to half of our current market value, you can see where this is going. And if we do the expansion as planned, those numbers are really quite impressive, north of $500 million a year. We've announced project funding support from both the UK with the UK Export Finance Group, and now from Canada with the EDC, their export credit agency. These parties together will fund approximately 70% of the total finance required, including all of the political risk insurance and commercial risk insurance. That money, when it's direct lending from the UK and from Canada, will going out the door at less than 1.8% over 10 years. And for the guaranteed debt from a bank panel, don't expect those numbers to be higher than 5%. So this will be the lowest financing that's been seen in this space. Our project timeline is that we are focused on the definitive feasibility study and the environmental social impact assessment. And with that, when that's finished at the start of Q2 next year, that will then trigger the finance together with a tier 1 offtake agreement. So despite that being expressions of interest, these are quite solid offers that will be triggered by us meeting things that we would do regardless as part of our stay in business. Demonstration plant should be on site by the end of the year, or if not early next year. There have been a few delays in the supply chain due to COVID, and we'll be updating the market soon once we've got a very clear idea of that. And then aiming for financial close by middle of the year into construction for production in 2024. The shares trade around 55-60 cents a share. That gives us a market value of about 650 million Aussie, nearly $500 million US. Cash in the bank at the moment is about 36-37 million, and we aim for that to be circa 60 million by the end of October as options convert. So we've already got a third of the equity required for this project to be developed in our treasury by the end of next month. And with the money coming in from Lilac, we're only missing the final third to actually have this fully financed and into production. There's significant upside. Our peers, for example, Standard Lithium is trading at north of 1.5 billion, and they only own 30% of their project. They are using direct extraction, albeit different. We don't have any brokerage coverage at a share price less than $1.10. So that's 2 times where we're trading at the moment. This isn't just a single project. There are others at Cauchari and Olaroz, and we're going to be announcing more to the market from November onwards, the work we're doing there. We've got a solid team on site. We've added to the board recently, and basically we're focused on producing high purity product using this technology for major ESG benefits. And this is going to be a new, significantly scaled, independent, clean lithium producer. So thanks very much, and back to the questions.